Hi, everyone, and thanks so much for joining us today for Reimagining the Financial Data Ecosystem. We're really excited to have everybody, and we're just going to give everyone just a minute or two here to settle in, and I imagine some folks are still logging on, so just bear with us one moment and we'll get started. All right, we'll get going, everybody, and thanks again for joining us, as I said, and welcome to Reimagining the Financial Data Ecosystem. We're really excited to be here today. My name is Dan Murphy, and I lead the Financial Health Network's work on consumer data rights. We're thrilled to be hosting this webinar as a part of Flourish's series on infrastructure for fair finance. This series has already featured two fantastic panels that I highly encourage everyone to check out if you weren't able to listen in live. The first was hosted by Aaron Klein at Brookings and focused on how to make real-time payments a reality. And the second focused on developing the credit system for greater fairness and inclusion, and was hosted by Melissa Coide of FinReglab. The next panel will take place on Tuesday, October 13th, and will focus on chartering a 21st century digital identity framework. That will be hosted by Sonal Shah of the Beek Center for Social Impact and Innovation. But today, as I said, we're really here to focus on the financial data ecosystem. And for that, we have an all-star lineup of experts to discuss that with us and help us announce the release of a new collaborative working paper titled Consumer Financial Data, a Legal and Regulatory Landscape. And I'll have a little bit more to say about that in just a moment. So just to introduce the panel first, though, we have Alex Acree, who's a partner at Mitchell Sandler. Alex is also the founder and managing partner of the Tacoma Group and previously served as the managing director and general counsel for Fenway Summer Ventures. Next, we have Kaitlin Asrow, who's a fintech policy advisor at the Federal Reserve Bank of San Francisco. Kaitlin previously worked at the Financial Health Network, and we're really excited that she can be back here to join us today. We're also joined here by Linda Jeng, who's a visiting scholar on fintech and an adjunct professor of law at Georgetown Law. Linda is also the head of global policy and special counsel at Transparent Systems, where she leads policy, regulatory, and product strategy. Next, we have Kelly Cochran, who's the deputy director of FinReglab. FinReglab, as I said, hosted the last event, and I highly recommend that you check out their work on cash flow data and credit underwriting. And finally, we have Chuck Muckenfuss, who will wrap things up for us today with closing remarks. Chuck is a senior advisor at Flourish, the chairman of the board at City First Bank, and a visiting lecturer at Yale Law School. And so for those of you who aren't familiar with the Financial Health Network, we're a nonprofit that's really the nation's leading authority on financial health. Through research, advisory services, measurement tools, and opportunities for cross-sector collaboration, we advance awareness, understanding, and proven best practices in the support of improved financial health for all. So at this point, you might be wondering, why is an organization that focuses primarily on financial health also so focused on the financial data ecosystem? And I think it's a fair question, but we've been focused on these issues for some time, going back to when Kaitlin was here, leading our work when we were still called the Center for Financial Services Innovation. At that time, our engagement with the financial services industry put us in a position to see that there was really a great shift underway, where technology was fundamentally changing the way that consumers interacted with financial services. So consumers were increasingly moving towards digital channels and automated processes to manage their financial lives, creating both new data and opportunities for new intermediaries to make consumers' data available to them. So while we saw that happening and we saw the rise of innovative products and services for consumers, we also saw that the data sharing infrastructure that they were running on had a lot of issues. On the policy side, consumers' right to access their data in the US was caught up in a knot of interpretive questions around Section 1033 of Dodd-Frank. And on the industry side, new intermediaries called data aggregators had sprung up to make consumers' data available, but in many cases had to rely on some suboptimal methods of access, which had their own risk. So in this context, we put out, and really Kaitlin led our work on this, a set of consumer data sharing principles in 2016, which stated that data should be available, reliable, user permissioned, secure, and limited to application functionality. Since then, numerous other organizations have put out their own principles, more or less reflecting a lot of the same questions that we raised. And most notably, the CFPB put out non-binding principles in 2017. So I think since then, though, two things have happened. We've seen the financial data ecosystem continue to grow, and we've seen policymakers finally begin to show interest in taking action here. On the industry side, the fintech industry has continued to expand, and with it, the financial data ecosystem has expanded too. Over the last year in particular, this has resulted in a growing number of mergers and acquisitions among fintechs and traditional financial institutions. In the data aggregation space in particular, we've seen a lot of notable acquisitions. Some of the largest aggregators, also partnerships emerging between aggregators and credit bureaus. Really just the industry has grown so much. And in fact, we now hear it often said that while the US might be behind from a policy perspective on open banking, we're actually leading the world from an industry implementation perspective. So there's kind of an interesting paradox there. On the policy side, though, we've really seen policymakers begin to show some signs of life. Last February, the CFPB hosted a symposium on Dodd-Frank Section 1033. There they collected input from industry stakeholders, consumer advocates, academics, nonprofits. And then in July, the Bureau announced a plan to issue an advance notice of proposed rulemaking on 1033 before the end of the year. More broadly, we've seen more interest from Capitol Hill in passing federal data governance legislation. In the Banking Committee, we've seen Chairman Crapo signal strong interest in data privacy before COVID-19 derailed this year's legislative agenda. Ranking Member Sherrod Brown released a discussion draft more recently, among other things, that would erect strict limits on data collection and sharing. And in the Senate Commerce Committee, House Energy and Commerce, and others, we've seen hearings throughout the year and broader data governance legislation being proposed by a number of lawmakers. And of course, all of this is against the backdrop of increasing activity at the state level, where we've seen the California Consumer Privacy Act, but we've actually seen a lot more states begin to take this up as well. So as the ecosystem has grown and policymakers have become more engaged, we've seen what really started for us as a relatively narrow debate over consumer data sharing between banks and fintechs and aggregators become increasingly connected to the broader debate over data governance and privacy. So moreover, when we look beyond Section 1033 at the broader legal and regulatory landscape governing financial data, we see a lot of common themes emerge that are largely in line with the themes highlighted by our principles in 2016 and those that came after. So with that in mind, the Financial Health Network, Mitchell Sandler, FinReglab, Flourish, set out to create a collaborative resource to understand the contours of the legal and regulatory landscape governing financial data in the United States. Today, I'm happy to announce that we're releasing this resource as a working paper, which we hope can contribute to a foundational understanding of the framework in the US. The paper describes US federal laws and regulations pertaining to consumer financial data, gives a contextual background, provides an overview of market participants, an overview of the relevant regulatory agencies, and a detailed summary of the relevant bodies of law. We've also provided commentary on a number of open interpretive questions and policy issues that raise both structural and substantive questions within the current legal regime governing consumer financial data. Now, we don't think the issues that we highlight here are exhaustive. We believe they represent areas where policymakers really should focus on how the changing data ecosystem is reshaping everything. But as I said, this is a working paper that we're releasing this as, and so please do send any feedback that you might have to datalandscape@finreglab.org. So before I pass the mic, I just wanted to thank the folks who were involved in the drafting of this piece, because it really has been an absolute pleasure working with them and really a great team effort. So Alex Acree and his team at Mitchell Sandler in particular have done fantastic work and really led the preparation of this report. That team includes Pierce Babarak, Julia Baker, Chris Napier, and Shelby Schwartz. And so really we can't thank them enough for their dedication to this work. Additionally, I'd really like to thank Kelly Cochran of FinReglab, David Silberman of the Financial Health Network, and Chuck Muckenfuss of Flourish, all of whom provided expert guidance and assistance here. And I think it goes without saying we could not have done this work without them either. So thank you all. And with that, Alex, I think it might be helpful to ground the conversation in the sense of, what is the legal and regulatory landscape as well as some of the key questions that we identified in the paper.
Great. Thank you very much, Dan. Appreciate the kind words. And thanks also to Flourish and the Financial Health Network for convening the discussion today. It's great to be here with the group to discuss this important topic, and I'm excited very much about the release of the working paper and grateful for the excellent collaboration with several members of the group on that. So I've been asked to give an overview of the existing financial data ecosystem here in the United States. This took us about 150 pages in the paper to get out, but I'm going to do my best to cover it here in just a few minutes. I'm going to start by quickly touching base on the main bodies of law in the United States that address consumer financial data, and we'll follow by highlighting some of the interpretive questions and policy issues raised by the current legal regime. I'll conclude with a few observations, having recently pored over in detail each of the statutes and regulations governing financial data here in the United States. I'm going to start quickly with Section 1033, which Dan mentioned, which was signed into law following the 2008 financial crisis. Section 1033 provides that upon the request of a consumer, companies that offer consumer financial products or services must make available to them in electronic form certain financial information in their possession. Section 1033 is critically important because it provides a clear articulation of consumers' rights, in certain cases, to be able to get access to the financial data that companies have about them. Next up is the Gramm-Leach-Bliley Act. Title V of GLBA, as it's often called, governs the use of non-public personal information by financial institutions and those receiving such data from financial institutions. It's split into two primary parts: the privacy rule, which governs the privacy of consumer financial information, and the safeguards rule, which governs information security requirements and expectations. GLBA is, and its implementing regulations are really a cornerstone of the current financial data regime in the United States and are incredibly important for us to talk about. I think we'll talk about a number of different topics related to them today. Next is the Fair Credit Reporting Act, which governs the use of certain kinds of financial data compiled by consumer reporting agencies for use by other companies in credit and insurance underwriting, employment, and other purposes. FCRA and its implementing regulations are important as they impose on providers and users of consumer reports, as well as on the furnisher companies that provide information to consumer reporting agencies, certain data accuracy, privacy, fairness, and information security requirements. FCRA also provides for a mechanism by which consumers in certain circumstances can request their credit files and dispute inaccurate information. So in addition to those three, 1033, GLBA, and FCRA, there are a few other bodies of law that are worth noting and that are covered in the working paper. The first is third-party risk management. Under federal law, regulators have the ability to examine companies that provide services to certain financial institutions. These rules are important because they give regulators the opportunity to assess and promote information security best practices and regulatory compliance from entities that they may not otherwise be subject to regulatory oversight. Next up is the Equal Credit Opportunity Act, often called ECOA, which prohibits discrimination on protected bases such as race, ethnicity, and gender in connection with a credit transaction. ECOA and its implementing regulations are closely linked to the use of data in credit underwriting, and whether uses of data constitute violations of the statute, sometimes brought under a disparate impact theory, have become increasingly challenging and important questions as the types and volume of data has proliferated. This has been a topic that's been well covered by FinReglab. Regulators also sometimes use their authority to prevent unfair and deceptive, and in the case of the CFPB, abusive acts and practices, often called UDAPs, as a supplement to other authorities to address information security and data privacy protection failures by companies under their jurisdiction. Finally, there is the Electronic Fund Transfer Act, which governs various types of fund transfers relating to consumer accounts. Among other things, EFTA governs how liability is to be allocated for unauthorized transactions and whether and how errors are to be corrected. Shifting directions now, I'd like to highlight some of the key interpretive questions and policy issues raised by the current federal legal and regulatory regime as set out in the paper. Rather than do this by statute, I've grouped the questions into a few themes below, and I know we're going to cover some of these elsewhere in our discussion today, so I'm going to keep this pretty high level. The first category is data access, and whether and how consumers can get access to financial data about them. Although other statutes touch upon it, Section 1033 most directly relates to this issue. But however, because Section 1033 provides that the rights are subject to rulemaking by the CFPB, the first question that comes up in this context is whether Section 1033 has already taken effect or whether it only will do so after the CFPB issues implementing rules. This is a question that Dan alluded to earlier in his opening remarks. Other questions related to data access include whether and under what circumstances holders of data should be permitted to restrict access beyond the categories specifically mentioned in the statute, and how broad the exceptions are that are listed there. Finally, whether and under what conditions data holders must permit data access to agents of consumers acting on consumers' behalf is a critical question in light of some of the changes taking place in the industry with data aggregators and other data intermediaries. The second big bucket of kind of commentary and issues that we discuss in the paper relate to how to apply statutory and regulatory requirements. For example, with respect to the data privacy restrictions in GLBA, it can be challenging to determine which requirements apply to various types of companies in the first instance, and whether the requirements continue as the data is passed from one party to another. This issue also comes up with respect to the FCRA, and when companies are considered to be consumer reporting agencies, and when companies that provide data are deemed to be furnishers in light of the new market realities around the fact of data moving around between so many different intermediaries. The second question of this type relates to the applicability of statutory and regulatory exceptions to the requirements laid out in the various statutes and regulations. For example, the privacy rules implementing regs exclude aggregate information and blind data from the definition of personally identifiable information. This effectively carves out that data from the privacy rules requirements. However, as new techniques and technologies emerge to re-identify data from its component parts, this raises questions around whether these exceptions need to be adjusted. The final category I wanted to talk about today in terms of open policy questions relates to the liability and responsibility of the various parties in the ecosystem. In particular, this comes up in the interaction between the various statutes. For example, Section 1033 provides a right for consumers to access their data from covered persons, but leaves open important questions, such as how liability and responsibility for data accuracy, data security, and account security should be allocated among the various stakeholders, and how the rights under Section 1033 intersect with the requirements of other statutes. With respect to data security, some have questioned whether the current regime is adequate to ensure that appropriate data security measures are taken by non-banks, which are often not subject to the same level of supervision as banks themselves. So these are just a sampling of the interpretive questions and policy issues raised by the current legal regime, and each of these is addressed in more detail in the working paper we released today. I wanted to close by offering a couple observations on the current state of play. Some of these comments may be discussed later in our conversation, so I won't go into a lot of detail right now. But the first is that the current laws and regulations covering consumer financial data feel like point solutions, which is a term borrowed from technology, meaning in this case that they're designed to solve a single problem, often without regard to related issues. And one has to undertake a significant effort to understand how the various pieces fit together and potentially impact one another. And as a result, what we have today currently is a patchwork. In order to determine what rules apply you must consider a variety of different factors, including the type of company, its relationship to consumers, what data it holds, whether it collected the data itself or received that data from someone else, what the data is used for, etc., to determine whether and what rules apply, which regulator is responsible, and what powers they might have over that particular person engaging in that activity. This analysis can be done, but it is complicated work and it requires significant effort. And in some cases, perhaps it isn't being done. So I'm going to stop there. And thank you very much again for having me today. And looking forward to our discussion.
Absolutely, Alex. And thank you again for all of your work on this. And I think that's actually a perfect transition point, because you mentioned that the current system really does feel like a patchwork of point solutions. And Kaitlin, you know, your most recent research, the role of individuals in the data ecosystem, really feels like a much more holistic framework. So I wonder if you could talk a little bit about that for us.
Yeah, absolutely. Thank you, Dan and Alex, for painting the patchwork that we're working with. So I want to thank the Financial Health Network and Flourish Ventures as well for the opportunity. And as required, I have to say that the views I express and the research I've done are my own and do not reflect the views of the Federal Reserve Bank of San Francisco or the Federal Reserve System. But I'm obviously grateful to work there and to have this opportunity to do this research. So as Dan said, you know, I think the approach I took was really to zoom out. I had been thinking about all of these policy tensions for a long time, and I became really fascinated by, amidst this patchwork, what I felt a growing movement in the United States to both take advantage of financial data more, you know, thinking about open banking and moving data around. And obviously we benefit greatly from the use of data with Uber and all of the technologies and maps and fintechs that we have. So we want to keep pushing that forward, but at the same time, you know, growing news cycles about data breaches, data misuse. And so I became really fascinated by this tension, and I thought, well, we're kind of dealing with these two issues separately when I see them as inherently related, kind of the two sides to a coin, but do any of our systems really address them holistically? So that was, I would say, kind of the basis of my research. And then adding on to that, I had been working a lot with Financial Health Network in the past and others to think about, you know, business to business considerations, like Alex said, right? Liability, who's responsible, how does this actually work? But I was left with the question of just, you know, what do we all think? We're constantly affected by this as individuals, as people who are using these technologies. So what say should we have in balancing this tension between use and benefit and risk and protection? So with that kind of framing, I went forward with a body of research. The recent publication is called The Role of Individuals in the Data Ecosystem. And I tried to take this holistic kind of high-level view, not looking at point solutions, but saying, what is our end goal? What do we want to get to? And how might us as individuals be involved in that? And I think an important thing in this research was to say, yes, there's a fundamental value in us as individuals proactively participating in this space, because a lot of the value is being generated by information about us by companies, but we're all in this together. So our interests have to be balanced with the interests of companies and intellectual property. Those have to be balanced with the interests of, you know, prudential regulators to make sure that fraud doesn't occur, any money laundering rules, and, you know, the interests of countries as a whole if we think about COVID and the need to collect and use data. So you know, as we're balancing value with risk, how do we also balance all of these different parties who have a valid interest in what happens to information? So kind of with all of that in mind, I tried to kind of dig deep and say, you know, where do we as individuals have a role to play, and where might that need to be moderated? So I do propose for kind of consideration and further evaluation a system of individual data rights that we would have to kind of control and use information about us. And that's inherently separated from data protection. So in a lot of the laws that Alex just mentioned, right? We hear these themes, right? We want to keep data secure and private. We want to allow data access. So I try to say data rights is one thing, data protection is another. They need to work together. But a core thing I wanted to propose is that our interests are aligned with data protection. The company and the individual both doesn't want that, you know, bad hacker to come in and take the data. But once we talk about using data, maybe our interests aren't completely aligned. So with protection, you know, the company has a responsibility and we need to trust that entities are doing that protection. But then there's this additional conversation about use and a lot of other elements like accuracy that can come into play with the individual. And so I think, you know, that's a conversation I look forward to continuing to have with all of you, you know, on this webinar and through this great paper that, you know, I had a chance to read before this. And so in addition to that, I think, you know, I don't sit in a policy-making function directly. I am in a research function, and so I leave kind of the nuanced policy corrections to groups and individuals like Alex and Dan and Kelly to kind of think through. Another step in my research that I'm interested in that I think is important to this conversation of balance and shared interests is actually, do we have the infrastructure and the technology to do all of these things that we want to do now that we have the end goal? I think we need policy involved and we need actual infrastructure involved. So my next push, in addition to having these conversations around policy, is to think about governance and infrastructure inside of companies. You know, how do institutions have the systems to respond to individual requests, keep data secure, respond to regulatory reporting requirements, use data for their own business needs? How do they do all of these things? And then what at a market level do we need to have to kind of make it all work, right? Is it a digital identity scheme? Is it something in terms of standards? You know, are there market level infrastructures that can help hold all of these things balanced at once, in addition to just the policy?
Thank you, Kaitlin. That's really helpful. And yeah, as I said, if anybody hasn't read Caitlin's paper on individual data protections and active data rights, I really do recommend taking a look at her framework. And so, you know, thinking about what kind of goals that we have and what kind of infrastructure we have, this conversation isn't just happening in the United States, right? We've seen a lot of other regimes starting to pick this up and take different approaches to it. Linda, you've spent a lot of time looking at what other jurisdictions have done, and I was curious, just sort of, you know, what does it look like in the international sphere from your perspective?
Sure. Well, thank you, Dan, first of all, for inviting me to today's panel on consumer data. Like Kaitlin, I am more focused on the research of issues raised by consumer data, data sharing, and data rights. And I'm currently putting together perhaps what will be the first academic book on open banking, to which Kaitlin is a contributor. And a benefit from working through the chapters submitted to me from authors around the world is getting to see how other countries are implementing data rights in open banking. So of the data rights that Kaitlin mentioned, the right to data portability is a particularly important, but also a challenging one to implement. Namely because the economic features of data is unlike that of traditional assets, which are spent after being used. Data can be reused over and over again, and at the same time by multiple parties, and combined to create recombinant data sets possessing different value. So, you know, when companies can combine customer data sets, we have to ask the question, you know, then why can't consumers also take their data with them? Several of my authors discuss this particular right to data portability and how this right should be designed. But in order to support the right to data portability in open data, we also need interoperability between all participants in the ecosystem. And with the emergence of different regional API standards such as, FDX here in the US, Berlin Group in the EU, STET in France, UK Open Banking, just to name a few. The lack of a single global API standard could lead to market fragmentation. But this fragmentation could be prevented if these regional standards were to permit interoperability between all banks, fintechs, as well as companies outside the banking sector. So Australia and Singapore are good examples of jurisdictions that view data mobility as important components of open banking. One of my chapter authors, Zi-King Yong, heads the Singapore's Personal Data Commission, which recently proposed a framework for implementing customers' right to data portability, while Australia has begun implementing its consumer data regulation, starting with the banking sector, with plans to expand to telecoms and energy sectors. Both Singapore and Australia are interesting in that this right rests with the customer, whether it be a person or a business entity. Whereas in the EU, the GDPR focuses the right in the consumer, the person, and similar with India, which is in the process of passing a privacy rights framework based on its Supreme Court ruling that Indians have a fundamental right to privacy. So given this backdrop, should the right to data portability be based on the individual as a human right, or should it be based on the customer, human or business, as a legal person right? So while the right to data portability can rest either on the consumer or person or a customer, which could be both a person or business, depending on the jurisdiction. How the data is defined can impact how data can and will flow, and defining the data subject as a business could address concerns about asymmetries in data flow between banks and fintechs, while defining this data subject as the consumer could give consumer, in theory, the ability to obtain value in exchange for their personal data. So let's break this down a bit further. What is a legal person? A legal person can be either natural persons or non-human legal entities that can do whatever ordinary persons can do under the law, like entering into contracts, owning property, suing or be sued, etc. Now, a human person is a natural person, whereas a non-human legal person is a juridical person. And juridical persons are corporations, cooperatives, partnerships, even sovereign states, whose rights are conferred upon them by law rather than natural born rights. So the debate of extending basic rights to legal persons is longstanding in law, and certainly in the philosophy of law. And the most recent and relevant case is the landmark US Supreme Court case, Citizens United versus the Federal Election Commission, back in 2010, in which the Supreme Court ruled that the government may not restrict political speech on the basis of the speaker's corporate identity, because corporations, like natural persons, have a First Amendment right to free speech. But then shortly afterwards, in contrast, the Inter-American Court of Human Rights issued an advisory opinion affirming that human rights belong principally to natural persons, and that these rights only apply to legal persons when necessary for the realization of the human right for the natural persons who are its members. So how we interpret who or what counts as people will fundamentally shape our data rights framework, which will shape our open data ecosystem. And by defining who counts as the center of the data universe will fundamentally affect the flow of data sharing and the right to data portability as a natural right or as a legal person right. And that in itself would determine how an open data ecosystem will grow and evolve in the future. So Singapore and Australia are both forward-looking in attempting to create economy-wide data sharing ecosystems. Making the legal person the center of the data sharing universe helps to address the data asymmetries that they've observed between banks and technology firms and encourage innovative services and products and the growth of their economies. However, I am going to argue that the US Supreme Court in Citizens United misinterpreted the corporation, which is a piece of property, for a person, and that we should not make a similar mistake when it comes to personal data rights. Given data's non-rival and recombinant features, the onerous burden will fall all too quickly to the natural person, the consumer, to prove that the data they generated is theirs to control and thus theirs to take with them. So I'm going to stop there, and, in case people have questions.
Great, thank you, Linda. That's really helpful. And I think this conversation about sort of the difference between a legal and a juridical person and just sort of who is this based on really was shown into sharp relief recently during the COVID crisis. I know one industry participant I spoke to said something that became very clear to him was that while we do have Section 1033 for individuals, we don't really have it for small businesses. And as small businesses were put in the position where they had to verify their payrolls to be able to get PPP relief, really they faced a lot of the same problems with payroll providers as individuals and others have faced with other financial institutions in the past. So I thought that was quite interesting and really is a practical example, I think, of some of what you're addressing here. And Kelly, I know that you all have spent some time as well thinking about what are some of the connections to current challenges that the data ecosystem that we're talking about really, again, shine some light on. And so I was curious if you could tell us a little bit about some of what you all are thinking about in that context.
Sure. Well, first of all, thanks to everyone. It's a pleasure to be here today. I'm really looking forward to this discussion, and already it's really rich. Let me explain a little bit about FinReglab first. We're a nonprofit research organization focused on the use of data and technology in financial services, with a particular focus on ways that it can be used to increase access to underserved communities, whether it's individual consumers, small businesses, or geographic communities. I'm thinking not only about credit, but other financial services more broadly. As Dan mentioned, one of our large initial projects that we have been issuing a series of reports on focus on the potential use of transaction account data, whether from banks, prepaid cards, or other sources, to be used in credit underwriting as a potential way to expand the information available for risk analysis and potentially reach people who right now aren't served at all or aren't served very well by the traditional credit system because they lack the kind of traditional sources of payments history that people rely on heavily for underwriting. And so we've been thinking about this and really got involved in questions about the ecosystem because this question about moving data back and forth between companies is critical to potentially new uses of data to expand access in various ways. And the events of the last 6 months, we actually published our third report in this series in February, focusing on the kind of the market context and the policy analysis underlying it. It's spent a great deal of the report thinking about ecosystem issues as well as the kind of mechanics and issues that are raised in the underwriting process itself with this data. In the last 6 to 7 months since, the urgency of these questions and the urgency of really looking hard at the framework of laws that apply to different types of financial data has only become more clear. The COVID-19 crisis, simply shutting down physical business in many ways, has accelerated the transition to digital financial services. It's come to, it sparked a number of new uses of data in health and various other fields. But even just if you keep the focus on kind of classic financial services, we're seeing a huge uptick. There were a couple of surveys done this summer. One found that 52% of Americans are using more digital tools and applications from banks and credit unions, and 59% are using more fintech apps than they were at the beginning of the COVID-19 crisis. And the vast majority of both populations said they intended to keep using those at kind of heightened levels going forward. So questions about what protections apply, what are the security, the privacy, and other rules are only going to get more important as this kind of data sharing and use accelerates. And to the extent there are differences between different types of financial services providers, and consumers don't understand that, that's potentially really important to going forward. And the second thing that I think has changed in the last 6 months is both the severe economic downturn and the mass movements for racial justice have really shown a spotlight on concerns about how lack of access to financial services can in turn affect economic mobility, and how do we break those two things apart and really start addressing issues that have been in place for a long time and are not necessarily moving in the right direction. In some cases by COVID-19, because of COVID-19, are actually getting worse now. We're seeing the impacts of both the disease and the economic kind of shutdown play out differently for different communities. So there's a number of things here. Financial data alone can't make up for differences in income and assets that have built up over generations, but they can make a difference in terms of access to financial services that can be really helpful to individual households and small businesses as they are kind of building their economic path. So whether it's access to credit, access to savings products, account management, gig economy workers. I mean, there's just a number of places where we're seeing innovation in the broader scope of financial services, and much of it is focused on data flows that are not really contemplated in the classic system from from years ago as some of these statutes were being designed. Another thing is that electronic data can reduce the cost of service. So even if the product itself is not hugely different, it makes a difference on the cost of delivery, particularly when it comes to small transactions, small loans, reaching populations that may be difficult to underwrite because they're just difficult to risk assess with available data. So it's another way in which that's playing in. And then, the question becomes, so this ecosystem is continuing to expand, as everyone has talked about already. It's been growing for more than 20 years, but this is pushing it even faster, even further. How do we make sure that that evolves in a way that is beneficial to both the customers, consumers, small businesses, and so on, and to the financial services providers, and we kind of balance those things? How do we do it in a way that actually speeds and broadens the recovery process? And how do we make sure that on the far side of this, as we kind of rebuild credit models for the long run, make other long-term changes, that we really are in a position where we can finally take advantage of some of these new data flows and build a longer term, more accessible and inclusive system. So there's a lot to think about, and it's difficult because in one sense, the events of the last 6 months, there are a lot of competing priorities right now. Resources, tech resources are under huge strain, and yet at the same time, it's more urgent than ever that we kind of consider these things. So FinReglab actually had a webinar in the series, as Dan mentioned, last week that was focused specifically on the potential use of non-traditional data and credit underwriting. And we've also released a paper today that's kind of following up on some market movements on that issue, in addition to the legal frameworks paper that we're all talking about. So, there's a lot of things to track, and a lot of urgency going forward. I think one of the things that becomes important as we think about long-term disparities is that, as I think a couple of people have mentioned, data itself is becoming an economic asset. And so the question about what are the rules governing access, protection, use, all of those questions become really important, because it's one way that you can either accelerate growth and inclusion or potentially really restrain it. And thinking through those design questions is really challenging, particularly when it comes to the need to be able to develop models and get access to data at a broad level to determine how it can be used effectively, and yet also protect the individual and their ability to kind of control their own data. So really challenging issues to be thinking through, but even more urgent than they felt 6 months ago. Thanks.
Absolutely, and thank you, Kelly. That's really a very helpful overview. And again, can't say it enough. I definitely encourage everyone to check out FinReglab's work on all of these issues if you haven't already. One thing I think that you said that really is interesting is just that, you know, first of all, just that data itself is an economic asset, which really does start to dictate some of the incentive structures around how the system works and how we may or may not be able to reshape it. And also just this trade-off between making sure that consumers are able to benefit from their data and that firms are able to do what they need to do with it as well. And right now, as we discussed a little bit already, a lot of that framework relies upon notice and consent. You know, if a consumer consents to data collection or data use in a particular way, then, you know, they are sort of bound by those terms and conditions. And there's been a lot of questions that have been raised about that. Alex, I was wondering if you could maybe walk us through some of the specific areas where, you know, there's some questions around consent in the financial data ecosystem.
Thanks, Dan. Yeah, absolutely. I mean, as we've talked about a little bit today, you know, consent as a topic, as a concept, comes up in multiple places throughout the body of federal law dealing with financial data. You know, specifically, you know, Section 1033 covers consumer consent around the sharing of data that a covered person would have about that consumer. It also comes up in the context of the Gramm-Leach-Bliley Act and Fair Credit Reporting Act as well, and they're implementing regulations in connection with the disclosure of information upon the receiving of the consent from the consumer to which it applies. So, I mean, I think those are the three main areas that I would point to where it comes up. But when it does come up, I mean, it is a really important concept because, you know, there is interwoven in many of these statutes concept of permissible purpose as well as consent, and so it does raise some issues around, you know, what does does the consumer actually understand the nature of the consent that they're giving, what the terms of it are that they're providing to financial services providers. Are they able to accurately, you know, and carefully weigh the risks and benefits of using a specific provider based on, you know, what that provider is going to do with the data that they're giving consent to? What kinds of disclosure is necessary for a consumer to understand the consent they're providing in different contexts? Best practices around consent. There's not much in the statutes and regulations governing the nature of the consent that's received, how it's received. And then I think a really important one is, you know, how can consumers revoke that consent? There is this concept of consumers being able to grant consent for covered persons or financial institutions to either access or use or disclose their data. But there's really, you know, precious little in there about the process by which a consumer can revoke that consent. And I would guess that many of us have never even tried to see how that would work. And then, you know, what happens if that revocation does happen? Does the data remain with the financial institution? Is it destroyed or deleted? You know, how can the consumer be sure of that? And I think, you know, one of the main points is, you know, how does a consent-based regime interact with one based on permissible purposes? So that together kind of raise a similar set of questions.
Yeah, thanks, Dan. Yeah, this is a subject near and dear to my heart. And to put a finer point, I think, on what Alex was describing as well, when we talk about consent more broadly and consent popping up in all of these different areas of the law, it's not all for this, we're not all consenting to the same thing, right? So in actually the California Consumer Privacy Act, the consent available to us by statute is to not have our data basically sold on. where consent comes up in GLBA, it's for, this minor, I don't have to share my data for marketing purposes with third parties. For the Fair Credit Reporting Act, you have certain rights and consent to things and not to others. So consent isn't just this like global concept of, yes, I give consent and then that's to collect the data, to process the data, to sell the data. No, we're giving consent currently for specific things in statute, but we're all experiencing consent all the time in our digital, lives, right? It's popping up, it's accepting terms and conditions. So for me, that's what, my mind jumps to when I think about consent. And I think it gets mixed up with when we actually do have a statutory right to consent in more narrow cases. So, putting that aside, I have a lot of mixed feelings about consent. It appears in our law. I think we're all very used to it. And when I think about, just individual agency and having rights, being able to choose and say yes or no feels very fundamental. And something I think is important if we are going to, as individuals, control our data. But at the same time, I'm not sure that it's possible, honestly. And I go into this in detail in the paper. And that's, it's not possible for a variety of reasons right now. First of all, ubiquity. We are interacting with technology constantly, and COVID has only pushed us there. So can we give really informed, deep consent every single time we open our phone, we go to a website, we download another app, we go to school, we go to work, all of these instances? Then, as we know, these terms and conditions are very hard to read, very hard to find, very hard to digest while we're trying to go about our lives. So, in my opinion, and again, this is my own, but even if we came up with the perfect disclosure, the perfect way to give consent, I don't know if it would actually work, because if I'm busy and I need to log into that class or that work call, am I really going to take the time, or are we going to become desensitized to consent, even if it is improved in some way? So given all of this and given kind of the patchwork of consent available to us, what I propose for consideration is what I call legitimate purpose. And that is shifting the responsibility from the individual to engage and understand all these nuances that this business is working with this business, this is what they're going to do with the information, moving that responsibility to assess that from the individual to the business, and to have the business be required to say, if I'm going to collect the information in the first place, if I'm going to process it, all of that must be in service of providing the good or service that the individual is expecting from me as a company. And obviously that would need to work with regulation to oversee that and enforce that. But it's really the concept is a shift of responsibility. And I think one important point I'll just end with is that legitimate purpose, as I've defined it, is distinct from legitimate interest, which appears in GDPR. Because a legitimate interest is at its core, does the business have an interest in doing this activity? And that is hard to define, right? What does a business need? What is a business interest? That could be collecting data and selling it downstream or doing kind of targeted advertising. And instead I'm saying, the center point of what's legitimate has to rest on the individual, because I'm proposing individual rights, so that centers on the individual. That's not to say that targeted advertising business models are bad by any means. It's just those need an additional conversation. You can't just have kind of, yes, this is legitimate from the get-go if it's not in service of the product or good that the individual is going to consume. And, I think that then the consumer is still saying yes. The consumer is still consenting by using the product. They just don't have to worry that when they go to that website or download that app, that they have to make that value and that appropriateness judgment every single time. And I make an analogy to food safety standards, kind of. I want to be able to walk into a restaurant if I like the food, and I don't have to go check that the cook has cleaned, the table that they're working on and has bought meat that's not expired. Those are basic standards. And then I vote with my feet. So that's kind of what I'm proposing for the digital environment, because I just don't know if consent is possible, but I still want to give us the right to make choices.
Thanks, Kaitlin. That's really helpful. And I think more and more folks are starting to come around to looking at different uses of legitimate purpose or legitimate interest standards. But I think the distinction that you draw is really important given some of the incentives we talked about. Chuck, this is something you and I have talked about quite a bit as well, just the utility of this consent regime and does it still sort of work? Curious if you have anything to add here.
I want to make a distinction and then just sort of highlight for everybody the significance of what Kaitlin is saying. The first thing is to distinguish, and it comes up in the body of law in two different ways. 1033 is a direction of sharing. It is, the consumer is directing the sharing of its data and information. The Gramm-Leach-Bliley, on the other hand, is permissioned sharing. And without going into it right now, almost everybody and I was in the original rooms, I'm an old guy, so I was in the original rooms when the first considerations of GLB privacy came up, and there was a debate about opt-in and opt-out. The notion of an opt-out regime in terms of consumer agency is a joke. And with all due respect to everybody I've ever talked to privately would agree with that statement. So but I think it's important to have those two distinctions, the distinction between I'm directing somebody to share. I still need to understand appropriate use and what's going to happen. But that's one thing. And permitting the sharing, which is a Gramm-Leach-Bliley concept, is itself a different thing. I think that the issue that in our neoliberal market economy, we have fallen back on consent, disclosure, and information as a mechanism of giving the consumer agency. At MIT, when they did a research, an experiment, which was to read out loud on the typical iPhone all of the things that the contracts that you have agreed to, right? It took 37 hours not to analyze and think about them, but to read them. I think this gets into fundamental question and it's a profound distinction that Kaitlin makes in her work between rights and protections, and the notion of again, embedded the notion of legitimate use. And so without going any further, what I would say is that we ought to have a conversation now about the utility of, and Kaitlin used the word informed consent, and informed consent by somebody with the capacity, time, and resources to make that consent is the appropriate question.
Thanks. That's really helpful, I think, to draw the distinction, because you're right. GLBA privacy and Dodd-Frank 1033 are two fundamentally very different pieces in terms of what their goal is. And so I think it's important that we all keep that in mind throughout. I think there's some more questions that we can move on to around accuracy or correction. We also have a number of questions from folks in the audience that I'd like to try to work in. So Linda and Kelly, maybe we'll try to go through a speed round here on some accuracy, and then we'll see if we can squeeze in an audience question if that works for you all.
Sure, I can start off if it's helpful. So
Yeah.
accuracy is a complicated issue for a couple of reasons. One is factual and then one is legal. On the factual side, the question is, what data are you talking about and what use is it being put to? Because the need for accuracy really depends on those two questions in large part. A lot of the work that we were doing, for instance, was looking at transaction account data being used in credit underwriting. Those are both financial sources of information. They're both subject to certain rules and certain kind of accuracy expectations in their own spheres. They're joining together, and that is raising some questions about how the two kind of legal bodies of information relate to each other. And we don't have any systematic studies on exactly how accurate bank transaction data is, but there's a fair amount of reason to expect that it's reasonably accurate because people are relying on this for their transactions transactions, they're managing their finances, the financial institutions involved have to settle the accounts and so on. So that's one thing. But you can also be talking about sources of data that are not financial in nature, that are coming into the financial system to be used for financial service providers. So that could be social media, it could be marketing information, it could be a range of things that are being used, maybe not to make decisions about credit, but they may be used for identity verification, for fraud screening, for marketing and other purposes. Those can be important too. So there's a number of questions in both, within different financial realms about kind of the accuracy of the data and how well those regimes are working, and then this broader set of information that's coming into the system. The second question is the legal side. As I said, there are different legal regimes in the federal financial space that apply. The Fair Credit Reporting Act is the main one on the credit side. Electronic Fund Transfer Act has important accuracy provisions as well on the kind of transaction account side. But EFTA, for instance, is really designed to make sure that the consumer is kind of made financially whole when there are unauthorized transactions on the account. It's not really focused on the data for data's sake. So as long as the consumer is being made whole, the way in which that gets recorded for posterity may not be very important within the EFTA, but it becomes very important potentially if that data is then used 5 years later to make a credit decision. And so, even in kind of relatively regulated space, there are questions about how these regimes come together. And then what do you do for other sources of information where the consumer may not have a right of access or a right of review and a way to follow up and resolve questions about accuracy, even when it's important to their ability to get financial services. So there's a lot of questions here. One thing I wanted to note real quickly, even the traditional credit reporting system has had long-standing questions about accuracy. The last major study on accuracy in traditional credit reports was from 2012, and that really largely predated the CFPB starting to supervise both consumer reporting agencies and furnishers. And so the CFPB recently announced that they actually are thinking about doing another study to update the status of what we know about accuracy in the traditional system. It actually might be incredibly helpful to also study areas like bank transaction records and some of the other areas of data that are coming into the system that may be used for credit underwriting. Because as I said, it's getting more diverse all the time. So you have to start thinking about accuracy with more types of data, more types of players, and the existing regulations, as Alex said, are kind of very specific to particular contexts rather than thinking broadly.
That's helpful. Linda, internationally, as folks think about accuracy, is a little bit of a different context and history in a lot of cases, I think. What have you seen there? Is there anybody in particular that you think has done this well or in an interesting way?
Well, before we even speak about what's happening internationally, I just want to share that when I was at the Fed, we were exploring RegTech solutions, and I still have some PTSD from cleaning the data. And so, the Fed actually is, as Kaitlin can attest, is a big collector of structured data. And part of what is so interesting about open banking and actually open data ultimately is the combination and the leveraging of unstructured data with all the structured data that we already have access to. And so how do you use unstructured data? Well, you first have to clean it up and then you have to put it into a format that's usable. That's really quite painful. And I hope that over time, our machine learning technologies can be of great help in that area. But I actually want to raise an idea that I wouldn't even say has been considered overseas, but I think is worth thinking about. I purchased a home with my husband about 4 or 5 years ago, and I discovered that the way credit scores work is if you are a renter, even if you pay your rent on time, you inevitably have a lower credit score. And I thought that was ridiculous for him, that he is financially much more responsible, yet he had a significantly lower credit score, which, you know, impacted me, who had a wonderful credit score in, you know, purchasing a home. And so I think that consumers should have the right to put forward non-traditional sources of data that reflect their credit standing. And so I know that a self-sovereign credit score, just like self-sovereign digital identities, is probably considered the frontier in, you know, how can you attest for accuracy for data sources put forward by consumers. But I do think consumers should have the ability to show, hey, you know, look beyond my FICO score, look at my ability to, you know, maintain a steady livelihood, my ability to pay my rent, my utilities in full every month, my credit card bill in full. These are things that I think we should have the freedom to include as part of our credit profile. So this is not something that has been or is being considered internationally as of yet, but I think the point of having an open data system is that consumers should have the freedom to control their data. And that means, you know, part of that means building their own identities.
Dan, I know you want to get to the questions, but can I just follow up real quickly on that? So there is a provision in the Equal Credit Opportunity Act called the shoebox rule that looks on its face like it does give consumers the ability to provide some of that sort of information. It hasn't really worked out very well in practice. And part of the reason why is because lenders don't really know what to do with one-off information. It comes back to this question of developing models based on large amounts of data to really understand what that information is telling you. And so I think it's one of the struggles in these areas between kind of the individual doing the thing that makes sense for them and the system getting the kind of mass data that it needs to really understand and use data in an intelligent way. So I think it's covered briefly in both the legal frameworks paper and in our report from last February, but it's a real challenge. We are seeing different systems come up where people are starting to report into credit bureaus with more sources of information, new models being developed based on cash flow information, everything else, but it is a real challenge because it can't always be solved at kind of a one-on-one level. And so, you know, but yeah, it's tremendously challenging. It's the real potential, but the question is like, how do you unlock that potential and really make it work for large numbers of consumers and lenders in an efficient way? And so still a lot of things getting sorted out there.
Agreed, and thank you, Kelly. That is helpful context. We have a lot of really great questions in the question and answer section now. We're not going to be able to get to all of them. Some of them are anonymous. Evo, I see yours are really excellent, but will certainly take a little longer to answer. So we'll maybe put those aside for the moment. But in wrapping up here, there's one last question I wanted to get to, and Nick Thomas from Finicity has also raised a really interesting question that, if it's okay with the panelists, I'll give you the option, I guess, of answering what was originally going to be the wrap-up question or answering Nick's question, whichever you prefer. So I think, you know, Nick's question is really, do you believe the CFPB, the OCC, or the Fed should be governing should be the governing national regulatory agency for open banking and consumer data privacy in the U.S.? And he also, as a secondary question, says, what role should the states play in that? I think I'll add on to that question a little bit too. He lists the CFPB, OCC, and the Fed, but a lot of folks right now are talking about, you know, is there a need for a data protection agency of some kind? Not unlike the CFPB when it was originally envisioned as sort of a central hub for not consumer protection, but for data protection. Although I can see that Kelly may have a slight difference of opinion with my interpretation on that. The other question that I thought might be an interesting way to wrap up, if folks would prefer, is, you know, Flourish is hosting this series as Infrastructure for Fair Finance. Every couple of years, the American Society of Civil Engineers produces an infrastructure report card and gives a letter grade to America's physical infrastructure. So to give you an idea, in 2017, it gave America's physical infrastructure a D+, which probably isn't terribly surprising to most of us, but still nonetheless is not encouraging. So thinking about the US financial data infrastructure, so the policy and data infrastructure that we're talking about here, I'm curious, would any of you be willing to give a letter grade to that? And if so, what grade would you give it? And then another question here is just what's maybe one low-hanging piece of fruit that you could use to maybe up the letter grade a little bit? So a smattering of questions there. I'll take a quick stab at it myself first, is just that I think if you were to give a letter grade, it would be a C-. I think for some of the bills that were statutes that when they were originally envisioned may have been working quite well, but as we've seen the data ecosystem and infrastructure evolving, there's a pretty strong argument that I think Chuck made very well that they really have not kept pace. So I wouldn't give it a particularly high grade. And I'll turn it over to you all to see who has thoughts. Whoever would like to go first.
I'll go. I actually wanted to talk about the low-hanging fruit question because this is something we spent a lot of time on when we were working on the report that we released in February. And unfortunately, I don't think there are a lot of low-hanging fruit, is the short answer. This is an ecosystem problem, right? It is really challenging for any one entity or even any one regulatory entity to solve all of the questions that we've been talking about for the last hour and a half. I think in the end, Congress will have to do some of this because when it comes to knitting together all of these point solutions, the regulators can only go so far in doing that. That said, there's a lot of regulatory authority that hasn't been used yet or recently, and starting down that path would be incredibly helpful wherever it ends up landing, because it will both give industry more certainty and potentially give Congress more information when it gets to the point where it's ready to engage on this. And so, I think one of the things that was really encouraging about the CFPB's announcement this summer was not just that they said they were going to start down the rulemaking path for 1033, but that they said also related statutes that are also under their jurisdiction. So Fair Credit Reporting Act specifically, I think, is mentioned in the notice, but it potentially would include things like Electronic Fund Transfer Act and others as well. That's really important. They're all interrelated, and so it's not easy to just take one and take it off the table and get it done and then move on to the next thing. But I think getting into the level of analysis that, is really going to be necessary to grapple with these questions will be incredibly helpful. And there's some things that nobody else can do if the regulators don't get to that level of engagement. So, that'll be a really important piece going forward. It's not a fast piece though. It takes time to do that and it's hard work.
Linda?
Just real quickly, part of the reason why I left the Fed for Georgetown is because as Kelly mentioned, it's an ecosystem of issues. They're highly interconnected. However, the Fed is only delegated powers to regulate the bank holding companies by Congress, and also manage monetary policy for the United States. It does not cover, consumer data privacy issues, for example. And so, that makes it really difficult for regulators to look at the issues holistically. I think at some point we will have to, and Congress will definitely need to step in. We want to avoid some of the pitfalls that the EU is dealing with right now. They have, one set of customer liabilities for payments related data under PSD2, but another set of liabilities, actually none, under GDPR for non-payments related data. Fintechs use a combination of both. It could be not only your bank account info, but they might be also using social media or even your location, for whatever particular service you've downloaded on your phone. And so if something were to go wrong, like who's responsible for what and how much, it's all not clear. And I think we have an opportunity in the US in that we don't have a comprehensive framework yet to develop one. And so, you know, liability is just one of the many issues that we can address holistically.
Great, Alex. And we'll try, if possible, Alex and Kaitlin, we'll try to keep these relatively short as well, because we asked Chuck to make closing remarks too, and unsurprisingly, we've had so much to cover, we're running a little long.
Great. Yeah, no, I'll be quick. Dan, you stole my my letter grade, so I was gonna go C minus, but that's kind of like a generous C minus, sort of like see what you can come back with on the next version. But yeah, I'd say C minus on the letter grade. In terms of low hanging fruit, I agree with Kelly and Linda's remarks. I do think, gosh, I mean, I know it's not easy, but I guess these are all sort of like relative, but I think the reuse and retransmission provisions of GOBA, clarifying how the requirements and responsibilities move with the data, I think is probably an area worth coming to and seeing if we couldn't come up with at least a clearer way to describe that, so that there may be less ambiguity. There's others, but I'll stop there in favor of hearing what Kaitlin has to say.
Yeah, I like that low hanging fruit, Alex. So I will be bad and try to answer a mix of the questions. So in terms of Nick's question of where should this kind of new thinking sit, I think one of the problems is we don't have a purpose-built entity who's ready to do that, right? Linda said, you know, we have basically this patchwork of who has authority where. You know, the FTC is involved as well as the agencies that were listed. And so I think for me, it's, you know, do we have a national data strategy as a country? And I think countries are starting to look at this and say, how do we actually get all these agencies to talk and maybe switch some of their jurisdictions around or give them new authorities? So we have to decide where that would be, but I don't think any place is perfect currently, because it's always going to have the flavor of that jurisdiction and what they're able to tackle right then. I agree with both Dan and Alex, like we're in solid C, if not lower territory in terms of infrastructure, because I think, you know, we are riding on this patchwork of old policy that's not purpose-built for what we're living in addition to the fact that we are depending on market companies and basically a complex ecosystem of business interests to maintain our digital infrastructure. And the question that leaves me with is that, you know, we have market forces providing our infrastructure. We have not purpose-built policy. So what opportunities are falling through the cracks, and what risks are we exposing ourselves to that we have absolutely no insight into?
Great, thank you, Kaitlin. Chuck, if you want to pick up on any of those last questions, and also go ahead in terms of closing us out. And I just want to give a special thank you to Chuck here, who's really been, especially for the paper, an incredible resource and just encouragement for all of us, and really inspiration. So thank you for everything, Chuck.
You're welcome. Thank you. I want to, so let me just contextualize. Before I stepped down at Gibson Dunn, I practiced law in Washington for 33 years and was involved one way or the other in most of the major financial legislation. Going back before that, I was a senior official at the OCC and the FDIC. So I've seen the policy-making process over an extended period of time. So with that background, because I'll come back to it, I would give it an I, and an I is for incomplete. And as Alex knows, he was a student and worked with me at Gibson Dunn, and Kaitlin, we did a project for Kaitlin on financial data 4 or 5 years ago. What I would say is that the system, that if you look at the study that Alex put out, we have a whole lot of law that has been enacted over 40 plus years. It is not modern. It is not coherent. it's not consistent in the and it needs to be fundamentally rethought. So if the policymakers universally were a student, I would say you have an eye, and then with Kelly saying, Muckenfuss, you've overdone this, I would say you have basically 24 months, maybe 18 months to turn in the new paper, else you will get an F or a D. We essentially do have open banking in the sense that data is flowing every which way. On the other hand, we have a legal system that is antiquated, out of date, has a bunch of gaps, and doesn't answer a lot of questions. So that, from my point of view, we need a fundamental rethink. I am very sensitive in the sense of low-hanging fruit. And the low-hanging fruit that could be the catalyst is the CFPB needs to do what Congress told it to do 10 years ago, and to come up with a regulation. If it comes up with a regulation, everybody in the industry and elsewhere goes, they're going to get all nervous about the process. But they're going to get all nervous, and then we could stretch this out for another decade or two, in which case but the answer is, if you take the work that Kaitlin has done in what is really a stunningly good piece, if you take the work that Alex and his team have done which is also an extraordinarily good piece, if you lay it side by side with what's been done internationally, which Linda's work is going to bring to bear, it is not hard to take a set of principles, that is to say, Dan, what financial used to be CFSI on Kaitlin's work, set the current law and rules side by side with a set of principles. It is possible to come up with a set of answers. All the answers, there's trade-offs. It's hard. The technology is hard. You're going to piss off a lot of businesses. If you really give consumers agency, it's going to screw up a whole bunch of business strategies and require a set of rethinking. But it is not like composing great music or getting to the stars. It is something that analysts, this team could do. It could take 12 weeks. It could take 12 months. It could take 12 years, or it could take to the 12th of never. But it is, from my point of view, I believe it is terribly important. I believe the kinds of work that's been done here and the kind of work that Kelly and her team have done at FinReglab are extraordinarily important. And what I would do is to give the audience a bit of homework, which is to sit down and take the time to read these documents, and to then take their principles and values and lay them side by side, and then make suggestions. I guess my next step, and this reflects being around a long time and being somewhat of an old guy, is that I'm impatient, and I've done this stuff long enough. Yes, it's hard. Yes, there are resource problems, but it is not impossible to do, and we ought to get on, and we ought to get on with the doing it. I want to again give a shout out to Jennifer Tesher, the Financial Health Network, and then particularly to Kabir Kumar, who got me involved in this stuff at Flourish Ventures because of their vision in terms of trying to do the hard work of articulating an infrastructure for fair finance.
Thank you, Chuck. That's really helpful. And yeah, very much want to echo that. Shout out to both Jen, to Kabir, to Melissa at FinReglab, to all of you, of course, for all of your hard work on this. This really has been a great discussion, and I'm really looking forward to getting more reception to the paper. we have a lot of really interesting questions here that I tried to capture, so I'll circulate those here, but I'd also like to remind everyone that for those of you who want to provide feedback to our paper itself, you can do so by emailing datalandscape@finreglab.org and check that out. And again, thanks everyone for participating. And in what seems like a miracle, we're actually going to end a few minutes before time. So,
Well, I have one thing to say, and that, not surprisingly,
easily denied.
not surprisingly, and that is that for the people that are listening in this group, what I hope is that this conversation can continue. The notion of it, in whether you use the word gap analysis or that I was suggesting, which is to say that the CFPB has articulated principles, the Treasury has reinforced it, the Financial Health Network has articulated principles. While we're in this very difficult period in the history of America, which I think is going to get more difficult, some of us ought to take the time to go through the exercise of trying to figure out what in fact we ought to do here and provide a blueprint and a roadmap for going forward. It's not easy, but it's not impossible.
Yeah, Chuck, I agree. I don't think it's impossible either, and I didn't mean to stress that.
No,
And in the beginning, I was talking about the urgency of it.
Yeah.
I think part of what I was thinking of was from a regulatory perspective, absent action by Congress, I think it is much harder to get where we're talking about going. You can't really do all of it from that level, but starting down that path is really important. And I think doing the broader analysis that you're talking about, kind of looking at the system as a whole, is equally important and complementary. And so I think that was mainly the point I was trying to make.
No, and
We can leave this as a to be continued for next time,
Yeah.
too, because I think this is not the last that you'll hear of this group in terms of this type of work that we want to put out together. So no, very much agreed. And thanks everyone for joining us. We'll leave it there. Thanks.
Thanks, everyone.
Bye.
Thank you.